All right, YouTube, we are back. Hope everybody's doing well. If you've watched our channel before, we talk about stock options, stocks, different investments and strategies. Today, I want to talk about decentralized finance, or DeFi, and more specifically, Drip Network. I want to talk about what Drip Network is, how it works, how you can profit from it, how does it differ from some of the other cryptocurrencies that are out there, and most important, is it too late to get in? Let's get started. Now this video is just going to be on those topics. If you need to set up your drip, I'll create another video and post the link in the description. It's a little bit challenging to get set up, so if you're not familiar with the space, haven't already used MetaMask and maybe even some other staking platforms, you will probably need help. So this one is just for educational purposes and to get your wheels turning about the Drip Network. All right, let's start off just by talking about what Drip is. So Drip is a cryptocurrency, just like every other cryptocurrency out there. And Drip rides on the Binance Smart Chain. If you guys know about cryptocurrencies, you know that Ethereum has its own language, it's got its own highway, Bitcoin has its own highway, Binance Coin has its own highway, and then the small subsidiary coins ride on those larger highways, those pre-existing blockchains. So Drip in particular rides on the Binance Smart Chain, and so it's essentially driving on that highway. Drip is a relatively new and relatively small cryptocurrency, so definitely be considered a small cap coin. Now, if you went out to buy cryptocurrency right now and you just wanted to buy Drip, you could benefit from the price increases of Drip, but that's not where the real magic is. The creator created a staking protocol. And if you're unfamiliar with staking, really simple concept. You buy tokens, you stake them in a system, and for locking up those tokens for a certain period of time, you would get paid some sort of interest rate. A lot of cryptocurrencies do this. All the staking protocols are just written a little bit different. Let's jump on the Drip website and I'll talk you through the details of how it works and how you benefit from the protocol. Then we'll start to break down whether we think it's sustainable, what we think about the founder and creator, whether or not it's a pyramid scheme, and whether or not this investment might be right for you. So the main site here is drip.community. This is their basic website. It's kind of cool. Everything you'll notice is water themed. Drip is created by a guy named Forex Shark. That's what he goes by. Forex has a really strong track record. Almost every project he's touched has turned to gold. So I feel pretty confident in him, but more on that in just a second. Let's navigate the site real quick. So the two tabs you're going to be most concerned with is going to be the swap tab and the faucet tab. We'll save the reservoir for later. The swap tab is where you're going to start. Once you buy BNB or Binance coin, transfer it over into your MetaMask, you'll come to the swap page and exchange your BNB for Drip. As you can see, currently trading for about $126 per token, and this box here is where you'd actually make that exchange. So if I had 10 BNB in here, I could put 9.9 BNB in here. I want to leave a little bit back for gas fees. If you guys are unfamiliar with gas fees, every transaction that happens on the blockchain has a sort of transaction fee. On some of them, they're really expensive, like on the Ethereum network. If you go buy a $1,000 NFT right now, you could spend $300 just in gas fees. Luckily, on the Binance Smart Chain, gas fees are relatively low. So every time you do a transaction on the blockchain in Binance through the Drip site, you're gonna pay anywhere from 30 cents to $1, somewhere in that range. So once you have purchased your Drip with BNB, it's then gonna show up on the faucet page. Your Drip balance will be located right here, how many Drip you own. Now, if you just held the Drip, like I said, you'd be able to benefit from the price increases of it going up. But that's not the magic. You want to stake it in the system and earn your 1% per day. So whatever Drip balance is here, you'd click max and deposit, and it would put that into the system and give you Drip tokens, right? So right now I've got 344 Drip tokens. That equals, at the current price of 126, a little over $43,000. That price obviously fluctuates as the coin price fluctuates. So let's read this off right here. The Drip Network's faucet is a low risk, high reward contract that operates similarly to a high yield certificate of deposit. All right, so a certificate of deposit, as you know, if you go to the bank and do a 5-year CD, they take your $5,000 and in 5 years, they'll give you like 3% back plus your initial investment. So you're essentially locking your money up with a promise to pay interest in the future. Drip Network is kind of similar. You're essentially buying the tokens, you are locking them up, and they're going to pay you 1% per day on those deposits. You're getting paid out in Drip tokens, but obviously it's also going to reflect what those Drip tokens are worth in US dollars. So this will pay you out a 1% daily return on investment up to 365%. So let me try to break that down to super simple. If you deposit $10,000 in Drip into the system right now, you will earn 1% per day, meaning you would earn $100 a day. After 100 days, you would basically break even, and then you could still pull $100 a day for an additional 265 days. So you could turn 10,000 into 36,500 over a year period. After 1 year, that initial deposit is maxed out. You can't earn any more rewards on that. So the magic of Drip though is in the compounding. Every day, you're gonna earn money over here. So 1% of your total Drip balance here, those Drip tokens, will end up right here every day. And you have an opportunity to either claim them, which is cash out, or hydrate, which is recompounding. So if I want to take this $113, put it back in the system as a new deposit and earn 1% on that money, I can do that, and that will extend out 365 days for that portion of the deposit. Now 10,000 to 36,500 is amazing, but look what happens when we actually compound money over time. All right, this is a basic daily compounding calculator. Let's put in that initial $10,000 deposit. Instead of 1% a day, let's put 0.9% per day because there's a tax system that I'll discuss in just a moment. Let's say we're gonna do this for 1 year. We're gonna reinvest 100% of the profits and make no additional deposits. You're just putting in the 10 grand and you're gonna compound it every day for a year. Click calculate, and that $10,000 after 1 year of compounding would turn into $263,000. Now that's assuming that the price stays the same on Drip. So if the price goes from 125 to 150, that would be quite a bit larger. If it went from 125 down to 75, that would be a smaller amount. But you can tell the percentage increase here of 2,500% is much larger than 365%. And that's the magic of compounding gains. Essentially, that's how Warren Buffett made most of his money. So that's what's theoretically possible if you put money into the system. Some of you guys are gonna be starting with a little bit less money, like, hey, I don't have $10,000 to throw in. What's it gonna look like if I throw in 2,500, right? About to get my taxes back, I'm gonna throw that in and just see if I can compound it. 2,500 compounded every day for 1 year. February of next year, you have 65,798. Which is a phenomenal return. And that's assuming no price increase. So the magic obviously is in daily compounding. And this isn't necessarily fully theoretical because Drip Network's been around for a little while and there's already people who have compounded enough to be pulling $25,000, $30,000 a day in profits out. So that's something to get excited about. Anybody who's gonna put in a reasonable amount of money here, let it compound and be patient, not look for instant gratification to just pull out and pull out every time they get their 1%. They could be rewarded with an incredible return on their investment. So back over to the Drip website. Your deposits will be the amount you've already deposited or recycled back in. So this number will grow every time you compound. Your max payout down here is always going to be 3.65 times this amount, right? Now the max payout that you can get is something like 100,000 Drip tokens, but that's like $20 million or something in that range. So I wouldn't worry too much about maxing out. If you ever do max out, all you'll do is start up a new account and start from scratch. So this team over here on the right-hand side, this is the amount of people that have signed up using your referral code. Drip Network is sort of like an invite-only platform. So in order to stake Drip in the system, you will need to have what's called a buddy or use their buddy code. And when it comes time to do that, you'll just enter it down here. There'll be a white box that says add buddy. You'll paste the buddy code in there, click update, and then it will make you eligible to make deposits. Now, if you need a buddy code, of course, I would appreciate it if you use mine. I'll post it down below. We're going to be doing airdrops and different things like that for the team to give them some additional rewards. The purpose of Drip is really to build up the community, have a strong community that believe in the project. And my hope is that we'll all build some solid wealth in the process. Some of you guys are already like, oh my gosh, you're building a team. This is a pyramid scheme or some sort of multi-level marketing tactic. So here's how pyramid schemes really work. At the top, you've got someone who gets in initially, gets a few people under them, they're getting people under them, they're getting people under them, right? That's what creates the pyramid. The people at the top are going to benefit most, and they're benefiting from each new layer that gets added on everyone's downline. So in most pyramid schemes, the people at the top are guaranteed to make more money than anyone that's underneath them. And that's what gives multi-level marketing a bad name. People at the top are calling friends and family trying to get everybody in because they know if they don't get a downline, they don't get people underneath them, there's no way for them to really make money. In a pyramid scheme, it is impossible for you to make money unless you add people to your team. Drip Network is nothing like that. As you add people to your team, you really only benefit from the people you brought on directly. You don't continue to get paid rewards for the people they invite or the people they invite or the people they invite. And probably more importantly, it's just because you invite someone doesn't mean you're going to make more money than them. So here's the scenario. I sign up, I put $10,000 into the system. I get you to sign up a few weeks later, you put $20,000 in the system. At the end of the year, you will have close to twice as much money as I do. You'll end up making more money because of the 1%. So the benefit you get from starting a team and signing up people under you is minuscule in comparison to the amount that they're going to make earning the 1%. So the system is set up to benefit the people that are putting money in and then rehydrating and compounding their gains over time. Some people are going to say, oh, well, the people who got in early benefit the most. Yeah, no shit. That's every investment out there. So think about it this way. If you were an early investor in Amazon and you took a gamble on a new project that was Amazon and were buying shares at $25, you would significantly benefit for every other person who jumped on the Amazon train after you. You'd technically be at the top of the pyramid. Almost every investment works like this. If you bought real estate 2 decades ago, all the transactions that happened after that drove the price up, you're benefiting from them. Most investments are predicated on a limited supply. There's only so many stock shares to go around. So the more people that buy Amazon or Tesla or Microsoft, they drive the price up because it constricts the supply. And the more people that sell or get out of the system drives the price down, right? If demand is dropping, but the supply stays the same, the price is going to go down. If demand is increasing and the supply stays the same, the price is going to increase. Pretty standard supply and demand concepts, right? So most people are now going to say, how can the system afford to pay you out 1% on your daily deposits? Isn't the system eventually just going to run out of money and then it can't pay anyone else? And the short answer is no. And the reason is the tax system. So if you've ever been involved in any other yield farms, crypto yield farms, where you're getting a certain APY per day, not necessarily staking, because those by nature are more stable. I'm talking about crypto yield farms, stuff like BNB Peach, BNB Matrix. There's hundreds of them out there. None of those are sustainable. The money is first in, first out. Set up like a pyramid. If you put money into the system for 15 days and the money runs out in 10 days, you will lose a portion of your deposit. Those are very high risk, very high reward. Many of them are paying out 17% a day, but they are not sustainable. They were never built to be sustainable. That's where the creator of Drip changed everything, because he wanted to solve those problems. So is Drip sustainable? This is how it works. Every time you deposit money into the faucet, you're going to pay a 10% tax. So if you're depositing $10,000, really only $9,000 is going to go into the Drip bucket after your deposit has had the tax taken out. Every time you withdraw money, when you actually want to claim it, take it out of the system, that also has a 10% tax. Every time you rehydrate, meaning you're going to take this money, you're going to hydrate, and you're going to recompound it, put it in here to make this money grow, there is a 5% tax. Those taxes in that system are what keeps Drip sustainable. So every member of Drip, every time they're hydrating, depositing, claiming, and withdrawing, every one of those transactions has a tax associated with it. That tax goes into the tax pool, and that tax pool is what pays everyone out their 1% daily. So the ecosystem is set up to last a long time. In addition to that, you've staked your cryptocurrency. You're only earning 1% per day. So if I wanted to pull out this $44,000 right now, I would not be able to do it. I can only pull 1% per day. So these massive swings in coin price that you see where big whales are pulling out their money, it's not possible with Drip because you're only able to pull out 1% per day. Now, some of you guys have been watching the crypto world lately. You've seen stuff like Squid Games. That was a cryptocurrency that just died recently. And there's a handful of others. What happens in these meme coins that go up super fast and then the bottom drops out, right? A rug pull, is a lot of big whales are in there. They own the majority of the cryptocurrency. They're the one pumping the hype. Maybe they're influencers. Maybe they got a super killer YouTube channel, but it drives the price of that coin up super high. Once it gets high, those big whales pull it out. Maybe they own 20, 30, 40, 50% of that cryptocurrency. As soon as they pull that out, everyone panics and it basically drops to zero. That happens all the time in the crypto world and in penny stocks and really any projects that don't have a lot of utility behind them, right? If it's just a meme coin that was set up just for investors to speculate on and try to drive the price up, and there's no real project or business that's behind it, those can easily crash. So here's another reason why that's not possible with Drip. Let's jump over to the white paper and scroll down until we get to the part about the whale tax. Okay, so this is super important. We've added a whale tax on withdrawals to help curb whales' ability to outpace other players in the game, forcing them to kick back some of their rewards to the community and maintain the sustainability of the project. The tax goes as follows and does not apply anyone below these levels. So if you own more than 1% of the entire supply and you try and dump a bunch of shares on the market, you're gonna get taxed an additional 5%, and it stages all the way up. So let's say some of these big whales got in really early, they've made a couple $1 million already, and now they're trying to dump all that back on the market. If you own more than 10% of the supply, you will be taxed at a 50% rate. So if they're trying to cash out $1 million, $500,000 of that is going back into the tax pool, and that tax pool is what's going to pay you your 1%. So theoretically, a rug pull is not possible with Drip for that reason. These big whales who've been in it for a long time and benefited from that long ride up, they can't just pull all their money out and then Drip goes to zero. So the system is set up to be sustainable. And that I know of, there's no other project like this on the market. I encourage you to jump into that Drip Community website and then click on the white paper and just read through all the details. This is going to explain a lot of different things. We won't hit everything, but we'll hit a couple key points. Okay, so the official token of the Drip network is called Drip. Rides on the Binance Smart Chain, like I mentioned earlier. That initial deposit is going to charge you a 10% tax. And once you stake it in the system, you're going to get a consistent 1% daily return up to 365%, which is of course 365 days of the initial principal amount. Now, when you cycle it and put a new deposit in from your earnings, that's considered a new deposit. So it doesn't necessarily mean that after a year, you're not going to be able to pull any more money out of the faucet. Just reiterating where the rewards come from, Drip rewards come from a 10% tax on all Drip transactions, excluding buys from the platform swap page. What that's basically saying is when you go get your BNB and you buy Drip with it, it's not going to tax you at that point. It's going to tax it when you put that Drip into the system to stake it. That 10% goes into the tax pool and is used to pay everybody their 1%. Now, if there's ever a situation where the tax pool is not enough to pay Drip rewards, new Drip will be minted to ensure that rewards are paid out. Given the ingenious game theory behind the Drip network, the probability that the system will need to mint new Drip to pay rewards is extremely low. Since Drip deposited into the faucet are sent to a burn address, and Drip is constantly being locked in the liquidity pool through the reservoir contract, Drip is the only deflationary daily ROI platform. So as time goes on, Drip tokens are actually getting burned, which is constricting the supply, and that'll help the price go up. And the key thing I told you about earlier was compounding, right? Compound like a boss. The idea is that you take the earnings that you've got each day and you roll them back into the system to get an additional 1% there. Moving on down to the onboarding system. If you want to build a team, this is super important. If you want to get referral rewards from the people you are signing up, you will need to hold BREAP tokens in your wallet. Now, to get the people right underneath you, if you sign a couple people up, you're going to need to have 2 tokens, and that's anyone directly below you in your downline. So if you want to build a team, at the minimum, you're going to want to get 2 of those BREAP tokens. And how you do that is you come over to the Drip website, you click on buy BR34P. You're going to want to stay on the V1 exchange. You'll select this cryptocurrency as BNB, and this one's going to be BR34P. Once you buy it, that'll land in your wallet, and you just have to have it in your wallet to be able to be eligible to get rewards from the people that you're signing up. Again, it's important to note that signing people up is absolutely not necessary. It's just if you want to build a team and get more people in the community. If you don't want to do that, you're perfectly fine just depositing some money in the account, earning your 1% per day, rolling that back in the system, and watching your wealth grow. Now, while we're here, we might as well cycle this back in so you can see how it works for me to earn 1% on this new money. I've got about $124 that I would like to put back into this pool because I want to earn 1% on that. In order to do that every day, it's extremely simple. You're just going to click hydrate. Your MetaMask wallet is going to pop down. It's going to tell you the gas fees, the transaction fee that you're going to have to pay to get the transaction to go through. Click confirm. It'll take a few seconds and it'll put this 124 over here, and you'll notice my deposit balance increases. Compound success. That money is now over here. My deposit balance has increased, and so has my max payout. So once you go through the whole process of getting Drip set up, if it's something that you want to do, the maintenance of it will take you maybe 30 seconds a day. It takes no time to hydrate it. Now, for me to squeeze the maximum ROI, I hydrate every 8 hours, give or take. But depending on your balance, that may be different for you. And I've got a little calculator here that I'll add in the description below that you can use as a resource. Some of you guys might be saying, okay, how much did you start with? You got 44,000 in there right now. I started with $10,000 2 months ago. So obviously I've had the benefit of the price increase and some people joining the team. This is my team down here. These 19 people I know personally, they're just friends or family of mine who are interested, heard me talking about it, wanted to get in. And then these are the people that some of my referrals signed up. So this is the first video I'm posting about Drip on YouTube. I've done a little bit of stuff on Instagram, but I've never shared my buddy code with anyone. So this is not me earning a bunch of money and only being successful because I put out a YouTube channel and everyone's using my buddy code. So again, if you are interested in getting into Drip, I'd love it if you use my buddy code. If you don't use mine, that's completely fine too. If you get into the Drip system at all, it helps everyone because the demand goes up, shrinks the supply, and the price will go up. So I'm good either way. I just hope that you value the information that I'm putting out there today. The question I've been getting a lot lately is it too late to get into Drip? And that's a completely valid question. Before I just outright state my opinion, let's go look at the data so you can make the decision for yourself. So this is a Drip analytics page. I'll try to post a link for this below as well. This is going to show you some information on Drip over time. So Drip's only been around for about 10 months, maybe 10, 11 months. So it's a fairly new cryptocurrency. And if you look here on monthly new accounts, in their launch month, they added 1,600 new users. Obviously there was a lot of hype around that, so that was larger. The next month, 280 users. June of last year, 460 users. Saw a little spike in July as some good press went out. And from then on, you pretty much see a massive increase. So is that good or bad? Are new users good or bad for any investment? Obviously, the more people that are getting into an investment, as long as the supply is limited, it's going to increase the price. So if this trend continues and we're adding 20 or 30,000 new members a month, it's going to squeeze the supply and the price is going to go up, which is going to be beneficial for all of us. So for me, when I was starting out and making my decision, this chart was really bullish for the long-term longevity of the cryptocurrency. Now you can see here, this is the last 30 days of new accounts. Late January, there must have been an announcement, 2,500 new users, and it went down. But on average, probably around 900 to 1,000 new users per day. And if you look here, that's pretty consistent, right? New accounts, it's the 16th of the month. There's almost 16,000 new users this month. So that's a massive percentage increase for people jumping in. Now the total number of drippers, right? Probably the total number of people that have purchased drip tokens is just above 75,000. To put that in perspective, only 75,000 people on the entire earth have purchased drip tokens, and only 65,000 people have taken those drip tokens and put it in the faucet. Hundreds of millions of people have bought Bitcoin and Ethereum and these other cryptocurrencies. So if this number ever increases and increases at the rate that this chart shows it might, the supply is going to get squeezed and the price is going to run up. That's not my opinion, that's just how the supply and demand curve works. And we're only midway through the day and there's already 550 new people that have signed up today. So if you plan to sign up, obviously do your own research, make sure you feel comfortable about it. Only put in the amount of money you feel like you can risk, you can afford to lose, right? It's crypto, anything could happen, something weird could happen and Drip could go to zero. Highly unlikely, but it's always possible, so just be prepared for that. But if you're going to getting in sooner before we add 30,000 more new accounts each month is going to be more beneficial for you because you're going to get that price appreciation. Now coming down here, this is super interesting. This chart shows everyone that's in the system. So these are all the people who have actually deposited money in the system. So the folks that have 0 to 100 drip is the vast majority. Looking at the count, 54,000, almost 55,000 people of the 65,000 that have drip in the faucet right now have between 0 and 100 drip. So if you're thinking about getting in for $1,000, $2,000, $5,000, you're not really that far behind the curve. This is super, super early in terms of what I think the bell curve is going to look like for this cryptocurrency. Now the next stage down, which is 100 to 200, you'll notice it drops to only 4,100. It's like 8% or something of the folks who have 0 to 100 tokens. Moving down the list, folks who have 2,900 to 3,000, there's only 20 individuals out there that have that many. Now, if you go way over here to the right, these folks are the whales. These guys own good chunks of the cryptocurrency. They got in probably on launch day. They've been compounding. Maybe they got in with 20 grand right away and then have watched it run up. However it happened, these guys have a lot of tokens. And most of these guys at the top are probably just about at max payout. So as soon as that happens, they're going to be restarting over from scratch and have to put their money in this section here. So that is a good thing. Also remember, when these guys cash out, they're going to get taxed really heavy because they own so much of the cryptocurrency. It's going to go back into the tax pool, and that's what's going to help pay us little guys, our 1% every day. So it's super important. That is the sustainability factor. So considering that Drip's only been around since April of last year, they're more than doubling their users every month. We're going to add at least 15,000 new users this month. And the fact that the Drip price hasn't really run up all that much in terms of cryptos. A lot of you guys have seen these other cryptos. They start out at 0.0001 cent and they run all the way up to 1 cent or 10 cents, something like that. Those are massive increases in price percentage wise. Drip started out at about $30. It's now at $125. From a crypto's perspective, that's not a very big gain. In addition to that, the market cap is fairly low. Some of these cryptocurrencies have $1 billion market cap. So obviously people are getting added, but how popular is Drip? How popular is the Drip app, right? The decentralized application that actually pays you out. In order to see that, we're going to go over to this link here. This is the DApp radar. This is going to show you all the top decentralized applications on the market. So if we click on all, you'll be able to see everything in there. You'll notice some of these are DeFi, some of them are games, other marketplaces. What we want to focus on is the BSC network, right? The Binance Smart Chain. And if you click on that, Drip is currently the #3 decentralized application on the entire Binance Smart Chain. That means it's getting very popular. And honestly, if you get rid of this game right here, Mobox, it should be #2. So already really popular, but gaining popularity by the day. All right, you're feeling pretty good about it. Maybe you want to jump in and get that 1%. You're interested in Drip Network. Here's the process I went through when I made my decision. I did a bunch of research before I started, had about $10,000 to put in. So my first initial question to myself was, how confident am I that this is gonna last 6 months? I felt pretty much 100% confident that it would. And I said, okay, how confident am I that this is gonna last 12 months? And at the time I was like, 85%. I feel really good about it, but there's always that chance. So what I did is I put my money in here, $10,000, that my deposit was, put the 0.9%, obviously that accounts for the tax, for 1 year. I clicked calculate. And I went through it month by month. So this is only a partial month, about a half a month, but the math's still pretty close. After about 5 to 6 months, the amount you earn in 1 month is larger than the amount you put in. So if Drip Network lasts for at least 6 months, you would be able to pull your entire initial deposit out in 1 month and still have a sizable balance left over. So if you put money in, no matter how much it is, let's just go down and say some of you guys are gonna do 2,000 bucks, and you're like, okay, when am I gonna get this money back? If you did it today, in the month of July, if you wanted to pull probably 27 of those 30 days, you could pull your initial $2,000 back out and you'd still have $6,600 in the system to let grow. So it puts you 1 month behind. So you could either just play with house money from then on, take this out and then let this thing ride, see how far it could go, or you could start taking out 500 bucks a month. But I would highly recommend redepositing at least 50% of what you've earned. So in August, if you earned 2,800 bucks, maybe pull 1,200 and put the remaining 1,600 back into the system. The important part is to grow your balance. It's gonna be great to put in $2,000 and then come away with $8,000. That'd be fantastic. In 6 months, that's awesome. But wouldn't it be much better to get 52,000, right? The point of this whole system is to compound it over time and try to make life-changing money from it, right? $10,000 for most people is not going to change their life. It'll help them maybe put a down payment on a house or help them pay something off, but it's not life-changing money. $50,000 for a lot of people would be. That's a couple different investments that you can make. That's a business you can start. It's a down payment on a house plus paying off debt. So that can really become an astronomical amount of money. That's just the power of compounding gains. Some of you guys are going to put in 1,000 bucks into this. Some of you guys are going to put 30,000, right? I know a guy who recently put in 40,000. So if you've got 25,000 that you're interested to deposit, you can turn that 25 into 657 at the end of 12 months. That's a fantastic ROI. And when I made my decision of whether I wanted to go in or not, I based it on those two things. 6 months I break even, I feel 100% confident that I'm at least going to get my money back. And in 12 months, I could make some big money. So if I lost my $10,000 initially that I put in, yeah, I'd be super bummed, right? I obviously don't want to lose that kind of money. But the risk is 10,000 and the reward is several hundred thousand, if not into the 7 figures. So that's ultimately what made the decision for me. Your personal risk tolerance is going to be the one that makes the decision for you. Here's another calculator that I think is super awesome. I'll try to put this in the description below too. Someone created the DripFi app, and this pulls your data in from the Drip website, lets you know what the current price is, lets you know how many total Drip you have, your max payout, and then you can manipulate this number to see what your payout is at the end of this amount of days. So there's about 318 days left in the year. Obviously I started a couple months ago, my balance increased over time, and so now I've got 40-some thousand dollars in there, which is 345 Drip. So with my current balance, at the end of the year, December 31st, if the price stays the same, I should have $867,000 in there. Right, that's fantastic. Everybody's super excited about that. The price could definitely go up. I'm predicting that it is, just based on the new users being added, the supply getting squeezed, some additional use cases that the founder keeps releasing. So I think the price is going to go up. But if it doesn't, let's just say the price goes down and just gets murdered, right? You guys get in today, you spend $129, it drops all the way down to 60 bucks, cuts in half, You guys are super pissed. Like, why did I ever listen to Scott? If that happened, price cut in half, I would still make $400,000. So let's go back to the current price. Let's say you guys are getting in. You got, let's just say you guys are getting in with 10 drip, right? That's 12 or 1,300 bucks. That's not too much money. Most of you guys can afford to make that happen. So let's just call it an even number at 10 drip. We'll say through the end of the year. And if you got that amount, you don't need to hydrate quite as much as me. Call it 24 hours for now. That 10 drip at the current price, so 1,300 bucks you put in, would end up 24,882 at the end of the year. That's assuming the price stays the same. If the price goes up, obviously that number is way higher. But if the price goes down, let's talk worst case scenario. If the price goes all the way down to $50, the $1,300 that you initially put in would still net you $9,600 at the end of the year. That's a better ROI than just about any other investment out there. So it's great to plan for the upside and say, okay, drip's going to be 400 by the end of the year. I'm gonna make 76 grand off my initial 1,300. But it's even better to go, okay, what's really the downside? If it's not going to zero, there's a bunch of levels of support around 50, 60. So I really don't see it dropping below that anytime soon, but it's theoretically possible. Let's say it drops down to 50. You're still gonna 8x your money. I mean, what investment out there is giving you 800% per year in a worst case scenario environment? So obviously there's risk. Keep that in mind, make smart decisions. But if you're willing to risk $1,300 to make almost $10,000 or more, the Drip Network might be right for you. So the last thing I want to cover is just who's driving the ship, right? When you're getting into any investment like this, especially DeFi, right? It's the wild, wild west. Everything's just getting started. You need to look at two things: the captain of the ship and the actual ship. It's extremely important to know that the captain of the ship has experience, a proven track record, knows what he's doing. It's also important to know that the ship you're cruising on doesn't have holes in it and different vulnerability points. Luckily for you guys, there's at least a dozen interviews with Forex Shark where he jumps on an AMA and answers a ton of different questions about how the project's set up, how the tax system works, what he did to make it sustainable, what he fixed from other similar projects that failed in the past. If you go and watch those videos, I think you'll feel really confident about what he's built here. But Forex himself has an extremely proven out track record. Almost every project he touches turns to gold. So that makes me feel really confident that he's put in the time and the work to make this as foolproof as possible in the DeFi space, and that he's not going anywhere. And the second piece is the ship. Some of the different staking protocols out there that have failed in the past had a buggy system, a lot of different vulnerabilities. They had no tax system, so they were only paying people back by inflating the currency. Just a lot of things that are not sustainable, and that's why those projects fell apart. So as you can see, Drip Network is set up completely different than some of the other projects that are out there, and those help add to its long-term sustainability. Now, if you want to get set up, I'll create another video after this that'll walk you through the process. It's a little bit tricky if you are not familiar with the DeFi space and you don't have a MetaMask wallet. It's going to be really difficult for you to do alone. So watch that video and I'll take you through step by step. If you've got further questions, post them in the comments down below, or you can hit me up on my Instagram. It's Scott_the_investor. Happy to answer any questions you might have. Hope you enjoyed this video. Happy investing.